Hello and welcome to Starting Up. We come to you this week from Dalal Street. And you might wonder why, because this street has for long been the favored ground of large listed companies. All that is set to change though, because the BSE is all set to launch its younger brother. Yup, the BSE SME Exchange. For the first time, the folks at the Bombay Stock Exchange have given me and 8 entrepreneurs inside access to what the new BSE SME Exchange will actually be like. Fasten your seatbelts for this Starting Up special. So I'm at the BSE and I'm here for this very special session on the BSE SME Exchange. I'd like to introduce my guests. I have with me Mr. Ashish Chauhan, the Deputy CEO of the BSE, and Mr. Lakshman, the CEO of the BSE SME Exchange. We also have 10 of India's fastest growing companies from across multiple sectors, and they're going to be quizzing Lakshman and Ashish on the SME Exchange and hopefully looking at suggestions for the exchange as well. So Ashish, I'm just going to start this off by asking you when and how the thinking behind the SME Exchange started. What are some of the pain points you noticed in the market which said that, hey, there is a need for this exchange right now?
The concept of an SME framework has been there for long in India. There are basically largely 3 aspects of the enterprises coming to the market. One is the enterprises themselves, that's small and medium enterprises. Today, if they have to come to the market, the collection cost, the IPO cost is very, very high. On the other side, the investors have been very wary of small and medium-sized companies. With these 2 sort of situations, the SME sector was not trying to come into the market. Within the companies themselves, if there are promoters, they need liquidity.
Perfect.
And so that is a good background for...
So lack of liquidity for both founders and investors in some way.
And that is on the company side. And on the investor side, there is an issue of the name recognition,
right,
the transparency and the expected performance of the companies and so on and so forth.
So Lakshman, I'm going to take the next question to you. This is a question a lot of the entrepreneurs here have today. What are the eligibility criteria for the BSE SME Exchange?
Eligibility criteria as such is very simple. There has to be minimum 50 shareholders.
Right.
And paid up capital, there is no restriction, but post-issue paid up capital has to be within 25 crores.
Right.
Up to 10 crores, it has to be, they have to be mandatorily an SME exchange. Right. And if the post-issue paid up capital is between 10 to 25 crores, they have an option. If they want to move to main board, they can move it, or they can stay on SME exchange.
Right, right. What about in terms of profits or revenues?
They have to be profitable for 3 out of 5 years and should have a dividend track record and all that.
To recap, the eligibility requirements to list on the exchange are the following. There must be a minimum of 50 shareholders investing 1 lakh rupees each. The post-issue paid-up capital cannot exceed 25 crores. If the post-issue paid-up capital is between 10 and 25 crores, the company can choose between either the main or the SME exchange. If, however, it's less than 10 crores, the company must stay on the SME exchange. In terms of profitability norms, every company that lists on the exchange must have a track record of distributable profits for 3 out of its last 5 years. A norm that certainly isn't music to the ears of the internet sector. I'm going to throw it up open to the audience. Ravi, the CFO of Paymate. So Ravi, your question?
You just mentioned about the paid up capital range. So there may be an advanced company or a company in the late stage where the paid up capital may be probably within the range, that's less than 25 crores. But the size of the issue may be much higher. Like, let's say, if the company has been in business for 4 or 5 years, or it's already an established player, so obviously it would like to cash in on the efforts that have already been put in. So the size of the issue may be 200 crores, but the paid up capital may be 20 crores.
You are right, actually. I mean, it all depends on the market value of the share. A 10 rupee share may be 100 rupee in the market. If that is the case, it will be 25 into 10 times. It could be 250 crores. Right. So, I mean, you are right. It can go, I mean, depending upon the market conditions, company's track record, image of the promoters and all that, and the appreciation it gets in the market. It can be much higher.
So, Lakshman, you're saying there's no restriction on amount of money a company can raise on the SME exchange as opposed to the BSE exchange?
Yes, theoretically, I mean, there is no limit. Right. But practically, I mean, you can say generally the issues will range between about 25 crores to it can go up to 100, 150 crores.
Okay, Vijay, you had a question?
Any reason for having profitability norms? Take example, the software companies, which has very significant growth, but they are in the investment mode and they're looking for more money to be put in back in the company. So you don't see that the profitability norms all over the world really. Why is it out here?
Ashish?
See, basically it's also something to do with the Indian capital market history. If the company is already profitable, the chance of its or the probability of it remaining profitable is pretty high. And when you are taking the money from the small investors or even investors at large who are not connected to you, they need to have that comfort that the company is already profitable and they are basically they are coming to the market for their growth. And that's where there is a bit of a balance to be maintained, and that's where we think this is a correct balance.
So, Ashish, this is a norm that could change, or is it written in stone?
See, basically all the regulations in a sense evolve. If some of the companies end up giving good returns to the investors and there is more comfort, at that time one can think of looking at this kind of what I call slightly more stringent regulations in a different way. Perfect. But today the prime importance is of getting the investor confidence into the SME segment. Without that, without gaining that confidence, we kind of run the risk of
shooting yourself in the foot. I just want to introduce Manu of Naptol. Manu, from your understanding of the exchange, do you think there are certain sectors which will be more attracted to this exchange than the other? What is the attractive quotient for you being from the e-commerce sector?
Look, the problem is, as I see it, today the new generation companies like the e-commerce segment where we belong to, where we are seeing very rapid growth, right? They don't become eligible to get a listing done, right? Because of the profitability criteria.
Right.
So a large segment of the new growth industries.
You're saying because your costs keep increasing as you keep growing?
No, because there is just so much of opportunity.
So
you want to invest more and more into
right.
the business and grow.
Right.
Well, even from an investor perspective, like listings like Make My Trip didn't happen in India.
It's not profitable 1 year.
It is not profitable, right? But they're still growing. So investors are missing on a lot of opportunity. Even if I look at my own company, we raised money from foreign investors last year. Even today when we are talking about raising money, because we see that today doing 5,000 transactions, we can actually do 50,000, and for which we need investment. But today also we are talking about raising $25 million, as against talking about raising 100 crores.
Sure.
Because there are no Indian players, right, we would get the investment from.
Right.
So I hope exchange reconsiders that eligibility criteria.
I just want to bring in Nikhil from Stock Easy here, because it's a very similar company. It's a company in the internet space. It's online stock selection. Looking at your future earnings, when do you see yourselves turning profitable?
We can be profitable, but the thing is, like if we earn profit and if we want to invest it in growing, then we cannot show that profit.
Sure. Feedback, Ashish, from the e-commerce sector.
It's an interesting question. It has been there perennially.
Right.
That and Indian exchanges have lost even large companies on those counts many times. And there have been, if you see, the regulations were changed for those kind of companies, even for large cap later on. So I don't see why this has to be kind of cast in stone, as you said.
Just to continue on the same line.
Sure.
So here we have retail investors as well as VCs as well as private equities. So can we have some kind of separation, as in a bunch of people are ready to invest into companies which are not profitable, which want to invest in growing?
So can we look at a subset within the same exchange?
No, as I said, once you have it's an interesting question that has been raised. There is a need clearly for doing it. Right. And there are precedents in India for even large cap, the unprofitable large cap stocks. Right. They have certain criteria. If they meet, they can still list. And we need to evolve it. It's just that the exchange has not even started. Sure. So to talk about what I call changes in regulations, I don't know whether it is advisable at this stage. But we have heard you loud and clear.
Yes, they've heard the entrepreneurs loud and clear. From eligibility criteria, we analyze the role of the merchant bankers on the exchange. That's coming up right after this break.
Actually, we have been widely interacting with merchant bankers, and we see the medium and small merchant bankers, they are highly excited.
Welcome back to Starting Up. Now, one community which will be at the core of the new BSE SME Exchange is the merchant banking community. Not only do they have to underwrite the entire issue for any company that's being listed, they will also be the market makers for a period of 3 years. On the flip side though, they are expected to drastically reduce their costs. How will they take to the new exchange? That's what we explore in the second part of the Starting Up special. We have Jay Gupta of the Loot, a very late stage company who will be looking actively at the exchange. Jay, what's your question?
Yeah, my question is that what would be the approximate cost if you want to raise approximately 100 crore rupees in a SME exchange? From what will a merchant banker charge us? That's number one. Second question is that what drives merchant banker to market make the stocks, for a period of 1 year or 3 years,
Sure.
which is required? How does
So we'll take the first question first.
See, the costs basically, some of the what I call the stringent regulations of capital raising in the normal IPO are not that stringent in the SME market. So we believe overall the cost of total issues will come down substantially. But over and above that, this is for me an opportunity for the merchant bankers and also the entrepreneurs to innovatively discuss with each other and bring down the cost in terms of make it more connected to the company's profits and so on and so forth. Because also merchant banker is committing to make market making for 3 years. In a normal market, the cost of an IPO would start somewhere between 5 to 7 crores minimum. Now, in a small or medium sector enterprise, if you kind of have that kind of cost, you would have a pretty sort of large percentage of the raised capital going into the cost, which is not feasible.
So let's take Jay's scenario. So he mentioned if he's looking to raise 100 crores, the approximate costs are 7 crores. A big percentage of that are the merchant banker fees, right? Which you're saying has to be negotiated between the merchant banker and the SME, considering the merchant banker is also the market maker here, so he has more to gain. But what about the listing fees and other fees, stationery costs and so on? How much lesser is that as compared to the regular exchange?
That's what I was saying, that the listing fees are pretty much insignificant in terms of the scale of activities. And what I said 7% is in the normal market.
Sure.
In the SME market, we don't expect it to be very, very high.
Ashish, how much you see it coming down by? If 7 crores is the cost for a 100 crore IPO on the main exchange, how much you see it being here? At the
It could
SME
be
exchange?
probably lower than 50 lakhs or 1 crore if you, if you plan it smartly.
The cost savings for companies on the SME exchange are on 3 fronts. Firstly, BSE officials expect the merchant banker fees to reduce from 5% to 0.5 to 1%. Secondly, in the SME exchange, both the stationery costs and the listing fees are negligible. Factoring this in, costs come down to between 50 lakhs and a crore for a 100 crore issue.
Risk for a company of our size to get listed in the SME exchange? Is there any risk of subscription, not subscription, or there is no risk as far as we are concerned?
I would answer the question. See, banker does the 100% underwriting for the issue size. 15% he has to take into his pick-off accounts, and remaining he can do the private placement with various other institutional and other investors. So that way there is a huge safety for the SMEs. In a normal main board, actually a company may come, and if it doesn't subscribe to certain limits, the issue will fail. But here it will be 100% ensured that it will be listed. Once a merchant banker takes up the issue, he takes the responsibility to get the company listed, and also takes a responsibility of doing the market making for next 3 years, which ensures sufficient liquidity for the trading of stocks.
So, but Jay's question comes from the fact that more than the entrepreneur being at risk, the merchant banker is heavily at risk in this exchange, right?
Yes, merchant bankers' credibility, merchant bankers, everything is going to be tested.
So the next question, Lakshman, is what has the BSE SME Exchange done to empanel merchant bankers, because they seem to be the most vital cog in this whole ecosystem?
Actually, we have been widely interacting with merchant bankers, and we see the medium and small merchant bankers, they are highly excited.
Right.
And even we see there is a change in thinking in the large merchant bankers also.
So what is the mood amongst the merchant bankers right now, Ashish? Honestly, what are the A merchant bankers saying?
See, the way we look at it is there are 2 paths to the entire framework. One is pre-start and the other is post-start. Right. Pre-start, a lot of apprehensions will be there. Right. And some of them, the companies, similarly some of the merchant bankers will take the initiative and run with it. Sure. And they will be the people.
So have some A-grade merchant bankers come forward already?
Large number of people.
So you're confident of merchant bankers coming on board?
Absolutely. And the apprehensions will also be removed to some extent once the market starts operating, then you talk business.
Up next, entrepreneurs quiz the BSE top bosses on both compliance norms and tax ops for firms that list on the exchange. That's coming up right after this break.
I am sure the government of India would also be thinking of giving some incentives to the sector.
Welcome back to Starting Up. Now, for SMEs actively considering listing on the exchange, one thing in their favor is that the new exchange will be a subset of this large structure here behind me. That means the SME Exchange will leverage the BSE's existing infrastructure to reach out to the analyst, broker and the investor community. How much will this help the SMEs? That's what we explore in the final part of our Starting Up special. Rupak, I want to understand, your company has grown quite substantially over the last 3 years. What are the options you're evaluating to further expand your company? Would it be private equity? Are you also looking at the SME Exchange? What are your views?
Well, until this opportunity, I hadn't really thought about this. The primary option would have been VC funding, which we're looking at towards the end of this calendar year.
So there are many entrepreneurs like Rupak who are looking at VC funding, PE, and you'll be competing with them for listing on this exchange, right? How would you compare listing on this exchange as opposed to raising VC funding?
We look at ourselves as what I call complementing the needs of the entrepreneurs, the investors like VCs and PEs, and even smaller investors. So we don't think that we are competing with the PEs, but the way we look at it is over a period. Listing on an SME exchange might be one of the primary conditions of giving you a VC funding or a PE funding, because ultimately if a banker doesn't have an exit, today it is much more difficult for him or her to invest in your company. And so for that, once you get the liquidity into the picture, which is a priori, that is beforehand, the cost of your funds, which you raise from such third parties which are not related to you, might actually come down substantially.
So liquidity is one point, and liquidity is at the core of this exchange, but yet the investment lot size is 1 lakh rupees. Right? Minimum investment is 1 lakh rupees. So there are views from entrepreneurs as well that will bring down the liquidity within the exchange. So what are your views on that?
The regulation says that primary market as well as secondary market, there is a restriction of 1 lakh rupees, and we had widely interacted with merchant bankers as well as we have been interacting with member brokers also. Many of them feel that a lot of 20 to 25,000 is good enough, and 1 lakh would be probably prohibitively high. These things are under consideration by the regulators. I'm sure, with time, things will evolve actually. I'm sure they will evolve.
So Manish, you've been in the finance field for almost a decade and a half. Looking at global models which have the investment lot size cap for the primary market, and there's some others like the AIM exchange, for instance, have the cap only in the primary market, not the secondary market. What would excite you while getting listed here? What lot size would excite you?
I mean, I think the lot size is one benefit, but I think the main thing for me is if you look at the AIM exchange, like you mentioned,
right,
one of the main benefits that it's done so well is because it has tax benefits for the listers. So is that something they're looking at here, is giving some sort of tax benefit?
Tax related issues we have already raised with the regulator and the finance ministry.
Right.
To encourage the liquidity, like buying of STT and all that, we have already written to the regulator as well as the finance ministry. And I'm sure the government of India would also be thinking of giving some incentives to the sector. Right. I'm sure the ministry would be coming with some very good incentives.
But currently also, if you are not a listed firm, these are